Hello guys, in this video we are going to see about accounts unit 8 maintenance of cash, subsidiary book and ledger. If anyone not yet subscribed our channel, kindly subscribe, bookmark. Nowadays in accounts we are using double entry bookkeeping system. For this, journal and ledger is very important. Without knowing the basics of these two, we can't be able to understand this unit clearly. This unit is very easy. They given more number of pages, but concept wise it is very simple. First we see about what is journal. A journal is a book in which we record each transaction order wise. Okay, record each transaction order wise. Suppose if you want to record the transaction from the last month, we have to mention the date wise. For example, day 1. In day 1, what are the transactions took place, like purchase, sales, debit, credit, what are the transactions took place. We have to record order wise, then day 2, day 3, day 4, day 5, like that. Okay. But suppose if you are having n number of customers, okay, you are having more number of customers, every transaction you are recorded order wise in journal book. Suppose owners ask you what is the outstanding balance of the customer Ramesh that you have to pay last month. Then what you will do? You will check page by page in journal book for the past month where the transactions of Ramesh took place, because you recorded order wise, so you have to check each and every page where the transaction of the Ramesh took place, like that. Then you have to add all the debit and credit to find out the final amount that he has to pay. Okay. See, however, if you want to find out the transaction affecting a personal account or expense, then we have to turn all the pages, then add all debit and credit to find out the balance of the particular account. To overcome these difficulties, okay, pertaining to a particular person, it may be person, asset, liability, income or expense. To overcome these difficulties, we are recording on particular pages in ledger. Okay, to overcome these difficulties, we created the one more book. It is known as ledger. We are recording all the transaction on a particular pages. Pages means folio, particular folio. For example, if you are having 3 customers, Ramesh, Yuvraj and Sasi. For Ramesh, you created in folio number 1, and then for Yuvraj, folio number 2, for Sasi, folio number 3. Now, while you are recording the transaction in journal book, we have to record corresponding folios in ledger book also. Suppose in this date we are going to record a transaction of Ramesh in journal book. Then after recording in journal book, we have to record in the ledger book in folio number 1, that is the transaction pertaining to the Ramesh. Like that, what are the transactions that you are recording in the journal, corresponding date in folios pages in ledger book, it has to be recorded. Okay, now you are having 2 books, journal book and ledger book. Now owners ask you what is the outstanding amount that Ramesh has to pay for the last month. Okay, then you take the ledger book. For Ramesh, the folio number is 1. Then you go for the folio number, page number 1. There in folio number 1, transaction pertaining to the Ramesh, all the transaction related to Ramesh only taken place in the folio number 1. So by adding that single page, all debit and credit, you can easily find out the value, what is the outstanding amount that Ramesh has to pay, rather than checking the journal book page by page. Okay, in journal book there will be a column LF. LF means ledger folio. Okay, while recording in the journal book, you will mention that corresponding ledger folio. For example, in journal book you are recording the transaction of Ramesh. In that column you will write 1. Suppose if you want to check in the ledger folio By knowing the folio number, you can easily check. Next, cash book. Cash book record all the cash transaction, receipt and payment. Okay, like ledger, cash book also has two sides, debit and credit. All receipts will be recorded in the debit side and all payment are recorded on the credit side. For cash book, there is no separate ledger book. Very important. For cash book, there is no ledger book, only cash book only. Next, record keeping basis. Accounting cycle has 3 stages: recording, classifying and then summarizing. In first, all the transactions that we are recording in order wise in journal. Journal book is also known as subsidiary book. Next, classifying. The entries that we made in journal or subsidiary book, those entries we will record in ledger book. Okay, in ledger book in corresponding ledger folios. For example, if the transaction belongs to Ramesh, then in ledger book the folio that belongs to Ramesh, there we will record. Recording transaction in journal is known as entering stage. Those transaction recording in ledger is known as posting stage. Entry and posting. Next is summarizing. From ledger book we can able to find out the profit or loss of the individual account. By summarizing all these, we can able to find out trial balance. From trial balance we can able to find out final account. Final account means balance sheet and profit and loss. From balance sheet we can able to say about the financial position of the company, and profit and loss account means we can able to say whether a company operating in profit or loss. The main function of ledger is to classify the record that recorded in the journal book to the corresponding account to sort out. This is the diagram how that ledger book looks like. Ledger account is divided into 2 sides. Left hand side, which is known as debit, which is mentioned as DR, and right hand side is known as credit side, which is mentioned as CR. The name of the account is written in middle of the ledger. JF means journal folio. Suppose if you want to check the original entry in the journal book, by knowing the journal folio number, you can able to check. Relationship between journal and ledger. By seeing this, we can able to clarify what is journal and ledger. This journal and ledger are important book in double entry bookkeeping system. First point, as we said earlier, transaction first recorded in the journal and then it is posted in the ledger. Okay. Next one, journal book is in chronological order. We are recording order wise, while ledger is an analytical record. Okay, the corresponding entries only we are going to record in the respective folios. And third one, journal is more reliable than the ledger because journal is an original entry. And then the process of recording transaction in journal is known as entry, and the process of recording transaction in ledger is known as posting. We may say entry or journalizing. What is meant by posting? Transferring debit and credit item from journal to the respective account in ledger is known as posting. While posting, what are the rules that we have to follow? First one, separate accounts should be opened in the ledger book. For example, Ramesh, Yuvraj, Shashi, 3 customers are there, means we will maintain separate folios in the ledger book. Okay, those things are nothing but the accounts. So separate accounts should be opened. And next one, suppose journal side a transaction is recorded in the debit side, then in ledger also corresponding debit side should be recorded or posted. Okay, every transaction has the 2 part. Debit means credit side, credit means debit side. Here we are recording transaction in debit side, then corresponding credit transaction also we need to record, because this is double entry bookkeeping system. And then next, if the in journal, if credit side is recorded, then corresponding ledger account credit should be posted. Okay, every credit has a corresponding debit side, so that debit transaction also we need to make a note. Next one, we will use a word to and by in the ledger book while posting. To is used for the debit side and by is used for the credit side. While solving the problem, we need to use in the debit and credit side. Next one, folio number, folio column. Folio column is nothing but the page number. Folio column, page number of the journal book, to check where the entry is transferred to the ledger. Okay, and then next one, date of the date column. Actually, on what date that the transaction took place. Next, balancing of an account. At the end of the every financial year, we need to close the account. The process of doing is known as balancing of the account. They gave the steps how to balance the account. Suppose if the amount in debit and credit side is equal, then there is no balance. The account automatically closed. Suppose if debit side total is more, suppose if debit side total is more, for example 1000 rupees, in credit side 900. If debit side total is more, put the difference on the credit side. What is the difference? 100. By writing the word by balance CD. CD means carry down. Similarly, if credit side total is more, for example 900,000, if credit side total is more, put the difference on the debit side by writing the word to balance CD. CD means carry down. Okay. Now, in this case, the account is in debit balance of 100 rupees. In this case, the account is in credit balance of 100 rupees. Next one, after putting the difference in the sides, add the both sides of the column. We have to add here 1000, 900 plus 100, 1000. Now we need to draw a thin line. Okay, now two sides balance. This is known as balancing. Then in next year, we need to open one more new account. Now, in next year, what we have to do? Bring down the debit balance on the debit side. Bring down the debit balance on the debit side by writing the word to balance CD. To balance CD. Sorry, BD. To balance BD. BD means brought down. We are bringing down. So brought down. Similarly, bring down the credit balance. This is credit balance. Bring down the credit balance on the credit side. By writing the word by balance BD, brought down. Okay. So this is known as balancing of the account. Balancing of the account means process of equalizing the two sides of the account by putting the difference. Okay, by putting the difference on the side where the amount is short. In account, there are totally three types of account: personal account, real account, nominal account. If these accounts are in debit balance or in credit balance, what it represents? Okay, that they given here. Personal account, nominal account, real account, we will see detail in next video. If personal account is in debit balance, it reflects they are more debtors. Suppose real account is in debit balance, it means they purchase a property. If nominal account is in debit balance, they may done an expense or some loss may occur. Similarly, in credit balance, okay, if personal account is in credit balance, then there is more creditors. If it is in nominal account, they may gain or they may receive some income. Real account usually in debit balance only, okay, because usually they will purchase assets only. Suppose if it is in credit balance, that they made in profit on the sale of the asset. One more important point, we brought down the outstanding amount debit or credit balance from the account to the next financial year. But in case of nominal account, we won't carry down any balance of the last year. Okay, last day of accounting balance we are not carried down, but we transfer that amount to trading account or profit and loss account. This is very important. We won't carry down the nominal account balance. We will transfer to trading account or profit and loss account. Thank you for watching video. If anyone not yet subscribed our channel, kindly subscribe, bookmark.